Hi there, welcome to Nepi Invest. You learn something new every single day. And the company I'll be featuring in today's video, have always thought it was called Sunrise Group. In fact, I thought it was called Sunrise Rice, not Sunrise Group, which is really interesting. And I have bought this company's products in the past, and I always thought it was Sunrise. So you learn something new every day. Now, a few months ago, I did ask the users of this channel to give me a company they would like me to do a financial year 23 result video on. So this would have been back in September. And someone gave me this company. And this company is intriguing, particularly around the structure. However, the company actually didn't release their full year results in August, but they did release their half year results in December. So I've decided to focus on their half year results because it's the most recent financial information from the company. Now, you might also hear this company called or being called Rice Growers Association. In fact, in a few platforms, it is still called that. I think they underwent a name change or something like that. So don't be surprised to see this company being named either Rice Growers Association or Sunrise Group, not Sunrise Group, Sunrise Group. The first thing I found unusual about this company, and have always found unusual about this company, is their ticker code. It's not three letters, and the majority of companies on the ASX have a ticker code that's only three letters long, apart from maybe this company and maybe one or two others that I don't know about. But Sunrise Group has a ticker code SGLLV. Now, you might also notice that some ETFs have four letters in the ticker code, for example, PAC or tech, or probably a few others out there as well. So that's probably the first thing I found unusual about this company is just the ticker code. And possibly the reason this company has an unusual ticker code is just because of the structure. So this company has two types of shareholders, A-class shareholders and B-class shareholders. Now, if you are an A-class shareholder, you are a farmer. If you're a B-class shareholder, you're an investor. So if you decide to buy shares in this company, you'll be classified as a B class shareholder. Now, A class shareholders, who typically are the farmers, they hold the right to vote at general meetings, but no right to dividends. That's really interesting in and itself. Now, A class shares are not quoted on the ASX and may only be held by rice growers who meet the production quotas prescribed by the Sunrise Constitution. No person may hold more than 5 A-class shares. So in practical terms, the voting rights held by A-class shareholders give those shareholders the right to control the election of directors and any changes to Sunrise's constitution. On the flip side, B-class shareholders or shares are quoted on the ASX. So if you become a shareholder of this company, you'll have B-class shares and confer on their holders the right to receive dividends as determined by the directors who are put in place by the A-class shareholders from time to time. Holders of B-class shares do not generally, which is interesting wording there, do not generally, so maybe sometimes they do, have the right to vote at general meetings of Sunrise. This means that B-class shareholders have no right to vote on the election of directors of Sunrise. No person may hold more than 10% of the total number of B-class shares on issue. Now, one thing I wanted to know here was whether A-class shareholders can actually own shares in Sunrise Group. So those farmers who have A-class shares, can they also own B-class shares as well? I actually did not see that information anywhere. Now, the reason they have this sort of structure, I have no idea, but they do say their objective is to optimize returns for both classes of shareholders, which is understandable because that's the main aim of the directors of a company. So that should be their main objective. Now let's have a look at the half-year results for Sunrise Group. Now remember, these are half-year numbers, well, except for gross margin. Well, that is a half-year number, sort of, based off the half-year numbers. And the net debt is sort of in a point in time. So a lot of these numbers you might double to get full year results. For instance, in financial year 23, this company had revenue, I think, if I remember correctly, about 1.6 billion. in the most recent half year, the revenue actually was 919 million, which was up 21% from the previous corresponding period. Profit at $30 million, up 69% from the previous corresponding period. So this was a really good half year for the company. Gross margins of 44%, but you can see the profit margins are fairly low, and operating cash flow and free cash flow positive by a fairly high amount. 81.9 million operating cash flow positive and free cash flow positive 73.4 million. Company also has $240 million of net debt. I probably would prefer that to be a little bit lower based off the market cap of this company. But if you do also compare it to the equity, many investors probably won't have a problem with this company having net debt of $240 million. B class shares on issue for this company, 64.4 million, and a share price of $6.57. That was a share price at the end of trading on Friday, the 12th of January 2024. At that particular share price, the market cap of this company is only $423 million. Now, compare that market cap to the profit of this company over the trailing 12 months, which is about, if I remember correctly, about $60 million or something like that. And this company might seem like there could be some value, some good value in Sunrise Group. Equity 573 million, which means based off the trailing 12 months of earnings, that's very important. This is not based off the half year. You need 12 months of data in terms of earnings to calculate return on equity. The return on equity is 12.3. Return on invested capital is 9.7. And the company also has a fairly attractive dividend yield, 8.2%. But remember, the dividend yield is determined by the directors, and the directors are put in place by the rice growers or the A-class shareholders. So who knows? Maybe at times, particularly if rice growing is tough, that dividend yield and that dividend might come off a fair bit. Now, this company has a lot going on. And in fact, you can separate the company into a few different businesses or segments. For instance, we have the international food, which is purchasing, processing, and marketing of rice to supply international branded and tender markets. They also have rice food, which includes rice cakes, snacks, rice flour, and microwave rice. Riviana, which is a specialty gourmet distributor of both imported and locally manufactured goods to retail customers and food services. And CopRice, which is a leading animal nutrition business. Now, the first column in terms of number, the rice pool is an increase in revenue from the previous corresponding period, so up 34%. And below that, the profit businesses, that first column is first half EBITDA and also the change from the previous corresponding period. So, for instance, International Rice, EBITDA 26.4 million, which was up 105% from the previous corresponding period. Rice Food EBITDA 4.6 million. Riviana 1.8 million, which was down 14%, and CopRice 7.9 million, up 95%. So it seems like most, if not all, of their different businesses or segments are profitable and did grow mostly from the previous corresponding period. By far, in terms of revenue, the biggest segment is International Rice, with $421 million of revenue. Rice Pool, $243.9 million. And then Riviana, $111.3 million. Rice Food, $58.8 million. CopRice, $129.5 million. And Corporate, $25.8 million. So a lot going on for this company. And most of what's going on for the company is to do with rice, which is understandable. This company is called Sunrise Group, not Sunrise Group, Sunrise Group. Now let's have a look at the valuation of this company. And this is where it could get quite intriguing because some of these valuation metrics are quite low, it seems. Anyway, P ratio 6.6, price to book ratio 0.75. So this company is trading below book value. EV to operating cash flow 5.9. Typically, when I look at EV to operating cash flow or EV to free cash flow, and I see a number less than 6, that could be a sign that a company is either really good value or even deep value. Also, the free cash flow yield is at 19%. That's actually quite high. And there is some suggestion, some research that has been done that suggests the free cash flow yield is one of the best determinants on whether a company can outperform the market. Some other research suggests it's revenue growth, but free cash flow yield is an important valuation metric. Also did a reverse DCF based off the free cash flow, just to see how much this company would have to grow or go backwards to justify the current valuation. And when I did the reverse DCF, it came out with a negative number. And that is negative 7.7%. So if this company doesn't grow in the future, the current valuation will probably just be fine. In fact, the share price could grow from here, even if the company doesn't grow, because at the moment, the market is discounting this company based off their reverse DCF. And maybe one of the reasons why the market is discounting this company based off the previous 12 months or the trailing 12 months information or financials is because this company had a really good financial year 23. $1.6 billion of revenue, significantly higher than what this company has seen over the past 10 years. And the reason I say that is if you look at the period between 2014 and 2022, revenue hasn't really grown all that much, if at all. So if you just exclude the last year, revenue going sideways, and I've also included gross margins here, and gross margins had been decreasing from 2014 all the way through to 2021. But the last 2 years, this company has seen a really good growth in revenue and a nice growth or increase in gross margins. And the question becomes, why has there been good increase in revenue? Is it because of the directors, the management of the company? They have led some really good growth initiatives, or has it just been really ideal growing conditions for rice farmers? I don't know. I'm not an expert in this area. And in this particular slide, what I'm showing you here is profit and cash flow from operations. So typically what I want to see is revenue growing through time, and then likewise, profit growing through time, operating cash flow growing through time. But when we look at rice growers, this is from Ticker. So as I mentioned before, sometimes this company is called Rice Growers Association or Limited. But as you can see here, profit and cash flow from operations going sideways, no growth at all. Sunrise Group listed on the ASX back in the middle of 2019, if I remember correctly, or early 2019. And in fact, the first week was the record high for this company. That's actually not a good sign when you do see the record high, all-time high for a company share price in that very first week it was traded. Share price got as high as $8.40 that particular week. And then the share price absolutely tanked it during 2019. Share price went from that high of $8.40 all the way down to $3.60. But that was the all-time low for this company. So it went from all-time high to the all-time low within about 6 to 9 months. And then for some reason, late 2019, share price went up significantly in 1 week, more than likely some good financial results. Seems like that was in December 2019. And then we went through COVID-19. You see a little bit of blip during that period, but share price went on a nice little run from 2000 or the start of 2020 all the way through to about the middle of 2022. Share price increased from $3.60 back to a secondary high of $7.80 in the middle of 2022. And since that secondary high, share price just drifting lower. So at this point in time, nothing to get too excited about when you look at the weekly chart. That's all I have when it comes to Sunrise Group. If you do have any questions about this company, make sure you leave it in the comment section of this video. But I plan to continue this particular financial year 23 series. And for some of these companies, eventually, not many more to go, about 15 to, I think it's about 18 more companies to go. And if I get to the particular company I'll be featuring in this series and they've released their half-year results, or maybe in their full-year results in February, I'll also include those results. But the next 5 companies I'll be doing in this series, a nice variety of companies here: Coventry Group, Maggie Beer, the company, not the person, The Reject Shop, ResMed, and then Alex. And that's all I have for this video today on Sunrise Group, sometimes also known as Rice Growers Limited or Rice Growers Association. Looking at the first half results for financial year 24. The company released those in December of 2023. Again, if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.